Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we are getting an update on Blackrock Silver. Blackrock is traded on the TSX.V under the ticker BRC and on the OTCQX under the ticker BKRRF. I'm joined today with the president and CEO of Blackrock Silver, Andrew Pollard. And Andrew, great to get you back on the show. We just talked a couple weeks back, but you've got even more information for us to dive into here at Blackrock Silver with some of the information you're putting out on the expansion holes. And so I want to get into these 7 holes that you put out. They're really high grade in certain intercepts, but I think what also stands out is the wide, broad nature of these intercepts. And this is your 500-meter step out to the northwest step out area. So give us some color around these 7 holes you just put out as part of the expansion program.
Yeah, thanks, Shad. That's always a pleasure to be here. Yeah, the results this morning were really encouraging in the sense, we've definitively shown that this project's going to get a whole lot bigger. Every drill hole here bolts right on to the existing mine plan that's starting from our DPB resource area towards the northwest. So they span an area about 500 meters, starting right where the current DPB resource leaves off. So these are all blue sky holes. And earlier this year, we announced some of the initial results from our expansion program where we hit on this 500-meter zone. So these holes are effectively us going back, infilling the zone to demonstrate continuity and build tons. And my goodness, we were successful. I mean, we hit a 10-meter zone in this, which is over 460 grams per ton silver equivalent, with some really high grades in there. I mean, that whole thing is high grade, but I mean, 3 meters of that was a plus a kilo. For example, we hit another zone over 11 and a half meters of, I think it was 325 grams per ton silver equivalent. So not only are we hitting high grades, but we're building some substantial tonnage, which is really going to help us backfill the mine life and potentially help us to up the throughput one day, which could also have a positive consequence for mining costs in terms of bringing the cash costs down. So yeah, very, very positive stuff. And really, I mean, it's showing that we got a really, really good handle on the system. Our model at this point is predictive. They've got a remaining 500-meter gap that will fully connect this area to a 12 million ounce deposit, which we call the Northwest Step Out, which is effectively the same vein. It's just got 500-meter gap in the drilling. So we're very, very low hanging fruit to go back and drill that out and effectively tie this whole project together as one.
Yeah, I was going to ask you about that because I knew earlier in the year we had talked about you stepping out here in this area initially. Now you've put more drill density in it. So, 2 questions in one here, Andrew. One, can you include these in the updated resources you're working on for the beginning of next year that'll include the expansion drilling? And then, do you need to be able to go back and drill that other 500-meter gap to be able to include the Northwest Step Out, or do you have enough continuity here to be able to bring that into the fold?
Well, do I need to? I don't know. Do I get to? Absolutely. I mean, this is, we've been pretty blessed this year on our expansion program, not only on to the northwest, but we uncovered a 1.2-kilometer zone bolting on to the east of our existing mine plan, effectively the early years of the mine life as well, which is also very, very shallow drilling that effectively runs all the way to the eastern edge of our project as well. One of the last producing mines in the district called Ohio. We got 7 drill holes into that. So, really for us, it's a question of where are we going to get our most return on investment? Where are we going to get the most bang for the buck, both in terms of blue sky, in terms of efficiency on the drills. So, right now, now that we've gotten these results back, we're just going back to the drawing board, deciding which area we want to tackle first. And we're in a really good position to do so because we got a lot of cash. We stopped drilling for these expansion holes just around the beginning of May. And about 2 weeks ago, we put out our financials, which ran up until April 30th. And at April 30th, effectively when the drilling stopped, we had $10.5 million in the treasury. So we've got no lack of targets. And, what's really nice about our targets is these aren't standalone targets that need a particularly high threshold to show economic potential. These both targets, that 500-meter zone remaining to the northwest and that 1.2-kilometer shallow zone to the east, these are all stuff that bolts right onto the existing, I guess, conceptual mine plan. So just very straightforward. Yet, this project, what we found and what we're proving is it's not constrained by geology whatsoever. It's just constrained by drilling, and we're happy to do it. We've got our resource coming out, within 60 days or so, likely less, which is going to focus on the early years of the mine plan, the M&I conversion program, which we released all of those holes maybe about a month ago, and the market really rallied on the back of that because I think people were waiting to see, is the project really as good as it looks? I.e., does the high grade really, really hang together? And we've proven that, when we included the full assay table there, and people can see with their own eyes, not only does it tie together, but the grade profile is absolutely unlike anything in the industry. So the next few weeks, we're putting our head down and doing our best to get that resource delivered on time. And our team is also planning the next steps on the drills. And I think we're going to be able to hit the ground running.
Well, a couple of points to dig into a little deeper there in what you just mentioned, Andrew. First, I think it'd be nice to just remind people we had talked about a little while back, but that eastern expansion area that you referenced is basically stepping out the other way. This one and these news release was connecting that area to the northwest step out area, about 500 meters still to go. But you mentioned that eastern expansion going towards that Ohio area. Maybe just remind people of the work you did there earlier in the year on the expansion program as well.
Yeah, well, early in the year, we had the RC rig available, and we decided to do some scout holes in an area that we originally tried to hit back in 2020 when we first got the project. And that area was called the Ohio target. Ohio was the one of the last operating mines in the district. It was the second thickest vein in this district, second to only our the Victor mine, which is also on our project. At Ohio, they were mining a vein that was 15 meters thick. And when we originally targeted, we just didn't quite have the understanding of which way things were swinging. But, 4 years later and, 200 drill holes in the database at that point, we decided to go back and take another crack at it. And yeah, we did. We hit on 7 drill holes over that 1.2 kilometer span, all the way to that Ohio mine, I guess. We hit zones, 4.5 meters thick of just under a kilogram per ton silver equivalent. We had a handful of plus kilo intercepts from that, really starting from the edge of our DPB resource area, effectively right where the conceptual decline right now is looking to go. And this is all very shallow stuff. And yeah, we've got a fair amount of drilling into this area now. So it's just a matter of getting the rig back there and infilling that too. I mean, 1.2 kilometers on, at those sorts of grades is, effectively blowing the door off the upside potential for the entire project. I mean, this is a zone. This 1.2 kilometer zone is something we never talked about as potential upside until we actually hit there. And now, knowing what we know now, this is going to really move the needle for us. So, yeah, there's no lack of low-hanging targets for us, and it's just a matter of where we decide to put the rigs down first. But the prospect for tying everything together into one big system as opposed to having 3 or 4 separate target areas or resource areas is looking better and better by the day.
Yeah, and I think more people are going to start tying together the dots there. And I'll put an image below that also for those listening in can see the conceptual layout of this as far as the different areas that you've got the resource on, but then how these step outs fit into the picture. And you're right, they just bolt on to the existing resource areas. So that's what's going to be nice about pulling these all together into one larger system. To that point, you mentioned the upcoming resource that's going to be coming out. It's kind of a two-step process. So maybe let's just clarify this for people, Andrew, that the first step is really just including the M&I drilling and filling in some of the gaps in the continuity and probably raising the grade profile. And then you'll actually have a second resource update due out at the beginning of next year that'll incorporate all this expansion drilling. So maybe just walk people through the two different resources coming.
Yeah, correct. The upcoming resource is primarily focused on, the early years of conceptual production. Our PEA, which was done at $1,900 gold and $23 silver, had a 2.3-year payback period built into it. And what we wanted to do is using that mine plan, we wanted to effectively de-risk the decision to go underground and actually start test mining this thing. So we decided to drill out the first 2 to 3 years of production, tying together all of our ounces on an M&I basis and helping us also to optimize the, I guess, design of that initial decline for the test mining purposes. So this upcoming resource in, I guess weeks, is focused on that. And, the nice thing about having economics out now is that I expect this M&I resource is actually going to be a mini PEA in itself, at least in terms of, analysts and the technically driven groups out there, because they already have an understanding of the cost profile. But a function of the M&I drilling we did was not only did we tie together the tons, a significant amount of tons that were laid out that this PA was based on, but we hit brand new zones up dip at incredibly high grades, meaning we're going to be front loading quite a bit of high grade tonnage into this upcoming resource as well. And, when that comes out, people are going to be able to quickly update their cash flow models, not only with the new tonnage, but also the what we expect will be a rise in grade profile as well. And the early years of any mining operation are the most consequential in terms of economics, and I think that's going to be quite a big step for us. I think the market's going to see just how robust this thing really is, and that gives us time to keep working our way and keep adding ounces leading up to early next year when we'll have another resource out showing all the upside, backfilling the mine life on the back end, and also rolling everything into a new PEA. And, this isn't just a drill story, far beyond that, actually. Everything we're doing this year on the drills is to put us in a position to go underground and start developing this thing towards the end of next year. We've got environmental baseline studies underway. We've got a drill at the site right now, which has finished off on our hydrology drill program, where we're getting all this data about where the water table is and flow rates, all stuff that's going to be incorporated into our next PEA and also serve as one of the cornerstone of getting this thing actually permitted. So, this is our last real big push on the drills from surface. I think in terms of upside, any expectations we had when we started this program last July have been completely blown away in terms of what we think is possible now. And I think when all is said and done, early next year, once we get our both resources out and that new PEA, it's going to look like a completely different project in terms of size and scope and economics, and that's a good thing.
Yeah, and I think that's such a great point you just made, Andrew. I was going to ask you about that. Some of the de-risking work the team has been doing, like that hydrology drilling you just mentioned, and setting things up for permitting, because it's obviously a fantastic exploration story and has been for some time, but you're quickly moving towards the development part of the equation here and have an eye on this actually developing into an actual mine again. So it's also a brownfield site where there has been mining in the past, so that's another advantage. Just one more quick follow-up, though, on the expansion areas while we're talking expansion drilling. In addition to the Northwest Step Out, and then in addition to that eastern expansion towards the Ohio area, there's also some little areas in between DPB and Victor, and then also going northwest, but maybe parallel to the Northwest Step Out zone. Do you think there'll be any follow-up drilling in those areas to keep bolting on more resources in those two zones?
Uh, the system's completely open to the northwest. The mineralization right now is tracking the outer margin of a caldera, so that caldera keeps running to the northwest, and we own a substantial amount of property up there. I don't really see the need to do that drilling. I mean, that might be something to do while we're working our way underground or once the story's advanced into development. But, even if we didn't add another ounce from our resource base, if we just, this is a project that would be built today regardless. But the upside is it looks like we're adding a lot of tons with some serious grade, and the project's going to get a lot bigger by the time that we're able to get our house in order in terms of permitting approved. So everything we're doing now, as I said, is just to put us in a position, make the project look as good as it possibly can. But really, the big idea is getting the go-ahead to break ground on this thing, which we think is quite possible by the end of next year, to allow us to start test mining. And that test mining, it's not going to be a small program. We think we can do about something in the order of 100,000 tons to get this thing going. And I think people underestimate, right now, even though our stock has moved quite a bit lately, we're still wildly undervalued compared to some of the other high grade peers, which actually all are quite a bit lower grade than us. So, we're trading as an exploration story, but our ability to permit this thing, given the private land aspect of our situation, in Nevada, I think we're going to be able to leapfrog quite a few of the developers, which, often they get caught in permitting purgatory. With us, we're still on the fun side of the Lassonde curve all the way to when we start breaking ground and ultimately making some money.
Well, let's put a little color around just a couple of comments you just made. When you do the test mining, you're going to be basically essentially doing a bulk sample. So you'll learn a lot geologically, but you'll also get paid from that, right?
Well, correct. Yeah, 100,000 tons. If you look at in our current PEA, which is based off our inferred drilling, that early stope you're in, which would effectively be the initial test mining area, that's laid out at about 986 grams per ton silver equivalent. We expect the grades to be even higher once we get this new resource out and ultimately the new PEA, given we've tightened up the drill spacing and hit a whole lot of new high grade zones up dip. Obviously, test mining, yeah, you're confirming mining methods. You're getting a good handle on rock stability and obviously metallurgical processes. But no one really talks about making money from these things. But no one else in the industry is mining anything like this, and would have the capacity to do something that substantial right off the bat. So the story's moving very, very quickly. I mean, heck, we only put the very first drill hole into this thing 5 years ago this week, as I think when we had our discovery hole announced. So, it's going to get a whole lot bigger between now and mid next year once we get that new PEA done and out to market. And ultimately, yeah, the process in terms of getting it permitted, it should be a straightforward one from there.
Well, and Andrew, just as we wrap up, the comment you made about the valuation of the company, I just want to lay this out for people and then have you comment on it. If you think about the catalysts that are coming up, you've got a resource coming up soon that's going to incorporate the M&I drilling. Then you're going to have another resource coming out at the beginning of next year that's going to incorporate all this expansion drilling. Then you're going to have an update to the PEA, and like you said, the M&I is kind of like a mini PEA of its own for people that want to do some of the desktop work. But you'll have the actual PEA come out. So there's a couple different opportunities for re-rating. But just already, before you do any of that, before you get to any of those steps, what you already have is undervalued compared to your peers. So maybe just talk about the potential for multiple re-ratings here just over the next year.
Oh yeah, well, I mean, and you're missing one of another huge re-rate potential in the next, 12 to 18 months, and that would be getting this thing permitted to break ground. Obviously, permitted ounces, especially in Nevada, command a premium to unpermitted ones. So, the de-risking is just as important as making the project look better from a mine life or grade profile basis. Yeah, on an ounce in the ground basis, I mean, not all ounces are created equal, right? So, the big bulk tonnage, low grade projects tend to not to command a very high EV ounce in the ground multiple. So really, when you're looking at pure comps, you want to look at the other high grade stories out there in the silver industry, and there's really not that many. What I can say safely is that we're trading at a substantial discount to the two to three other high grade stories out there right now. And I think a fair portion of that is simply the market is waiting to see that the high grade definitively hangs together. And for us to really put that out in a M&I resource, I mean, that's really the only thing that I can see holding us back at this point. And that's something that's going to be out there in the next 60 days or so. If you look at us on a PNAV basis, we're trading at a substantial discount to other companies right now that are working the exact same plan, just maybe a little more advanced than us. Within the next year, we'll be at the exact same level as, some very notable names in the industry who are trading at 4 times the PNAV that we are right now. So if we put our head down, do the work, de-risk the project, and get this thing to a point where we can get underground and start test mining this thing, not only will we have a lot of room to run relative to our peers, but I also expect the rising tide to raise all the boats in the industry as people start paying more attention to gold and silver. So, relative to our peers, we still got a big gap to close. Not only, will we be showing I think a standout grade on an M&I basis in the industry, but I also think we're going to be adding a lot more ounces along the way too, which should really move the needle as well.
Yeah, it's a good place to wrap it up, but you can see that there's definitely reason just to re-rate it based on, the price to NAV and versus the peers. But then when you layer in the upcoming two different resources that are coming, the updated PEA like you say, the permitting catalyst, the permitting ounces being worth more. And I would also say even a premium for U.S. ounces because of the domestic push in the United States to get mineral projects developed, especially here at a brownfield site in Nevada, one of the best jurisdictions on the planet. So a lot of positives stacking up here and a lot of news that's on tap coming down the pipeline for Blackrock Silver. So if you thought some of the drill news was exciting, there's still a lot of news to go. And for those listening in, there's a link down in the show notes where you can click on it and head right over to the Blackrock Silver website, straight to their news section where you can get updates sent to your email inbox, or you can also just follow along with the news as it hits the wires. Andrew, definitely keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
Thanks very much.